Hey, good morning. Chris Lester and Caitlin Urchick here from Professional Planning Services. Want to welcome all of you and thanks for taking time out of your day to join us. I'm a financial advisor here in New Jersey that has been doing financial planning for 30 plus years to both the community and quite often small business owners. And, last year we started to introduce and do a deep exploration of something called the ERC, which is the Employee Retention Credit. Now, Caitlin's here with me, and she's going to be putting up some things, as we go along. But really, today's purpose is to introduce you to, some of the rules and regulatory environment, and give you the ability to do this yourself, or maybe get some hand holding along the way to see if you qualify. So, without further ado, let's continue. So, the ERC timeline, right? A quick look through the timeline of changes and highlights and things that maybe you were told that you didn't qualify. Maybe you were told that you didn't have a reduction in income. And again, the rules, not only are they complex, but they change. And this is quite often, if you look here in March of 2020, the ERC was passed under the CARES Act. That's the Coronavirus and the Relief Act, right? That took basically businesses and allowed the government to help people to get something. You may be familiar with the PPP, right? It's a Paycheck Protection Program, or the ERC, which was the Employee Retention Credit. And initially, you had to pick one. So quite often, CPAs would tell their clients, take the PPP, take the loan forgiveness. You can't do both. Well, in December of 2020, the TCD-TRA, and let's see if I get this right? So it's the Taxpayer Certainty and Disaster Tax Relief Act was passed. And it was that act that allowed you to not only start to qualify for both, but also to make it retroactive. Now, in January 2021, this notice of 2021-20, and you can Google it, but basically what it's saying is new guidance that allows employers who receive PPP loans to be eligible for the ERC tax credit. And that was retroactive back to March of 2020. And then in November of 2021, Congress basically introduced the Infrastructure Investment and Jobs Act, which ceased the last quarter of 2021. So the ERC timelines, just so you have sort of how much time do you have left to qualify. So it gets a little complex for this webinar, but just understand that it was 3 years from the last day of each quarter. So if you're applying for, say, Q4 of 2020, well, then that ends this year, 12/31 of 2023, 3 years. And then it's a rolling forward quarter as we go forward. So as we continue, what was the problem? Well, initially, when the PPPs were first made available, local banks that had business owners as clients were very helpful, right? Because they were getting commission. But when the ERC rules were changed, right, they weren't getting paid. So really, there was a lot of mystery surrounding it. So folks would call their CPAs. And the first problem is most CPAs don't do bookkeeping. They got the information correct initially, but they never went back and looked at the amendments. And then not only if they did, then what they're finding is that, this is not in their area typically that they handle. That's usually, the payroll company. So, lastly, payroll companies, we're going to need those documents, right? So you have your quarterly filings, you have your 941s, which are employee recordings of whatever employee, their hours during those quarters to see if they're eligible. I'm not going to really get too deep on the math, but you may have heard these commercials on TV, $26,000 per employee. And these can add up to some big numbers. But here's a breakdown of the math. In 2020, so first of all, 2019 is the base year. So that's where revenue was based on. So if 2020 Q1, Q2, Q3, Q4 of 2019 is your baseline, Q4 of 2020, each employee is allotted a $10,000 ceiling per employee per quarter, but the percentage in 2020 was only 50% for a maximum of 5,000. Now we forward into 2021, and Congress with that amendment changed the percentage to 70% of that 10,000. So that's $7,000 per quarter for 3 quarters. That's 3 quarters is 21,000 plus the 5,000 from 2020. That's where you'll hear the number, a maximum credit of $26,000. So as we continue, sorry to get down into a rabbit hole there, but it's important that you understand that. So here are some answers to commonly asked ERC questions. We can help you with your questions. One of the platforms that we uncovered was something called Lynx. Lynx is a software program that connects with the team of CPAs at ERC specialists and allows you to either enroll this yourself. And if you'd like the link, we can send it to you. You can contact us. You can do this all yourself. Or if you want our hand holding, we can absolutely help you with that as well. Now you're going to find out with the questionnaire, and I believe Caitlin, you're gonna put that in later, right? The questionnaire.
I just threw it up on the offers on the side screen right now.
Perfect. So if you go there, you can go in and look, and then, processing, different folks, we've had some clients that have started to get funds back. And although we say it can take up to 6 to 7 months to get your money back, we've been seeing that the IRS has been sending out checks from the Treasury, in 4 to 5 months. So as we continue, right, there are 3 different tests. And this is, again, where there's a lot of misinformation, almost assumptions that are made. And I want to really specify that each of these 3 tests, I want you to put the word "or" in between them. They are not 2 of them, not all 3 of them. They are "or." You must qualify for one of these 3, and they all have different criteria. That's where that Lynx introductory software program can help walk you through. And as you read the questions, they're very pointed questions to see if you qualify. But the first is the gross receipt test. Now in 2020, again, 2019 being the baseline, if you had a 50% decrease in revenue because of COVID, right, you could be eligible. And then in 2021, they then changed that. So it was only a 20% reduction. What I like to say is that, let's say that you earned $100 grand in the first quarter of 2021. I'm sorry, in 2019. Well, that's your comparative baseline. Compared to 2021's first quarter, you would have had to have earned $79,000, 20% plus reduction to be eligible to qualify for that first component. But what we found is most people actually during COVID, a lot of our clients anyway, actually made money. And this is what they're hearing, that they'll say, well, I called my CPA and he said I made too much. And that is because they didn't quite understand with that amendment, it's or. And the next is what they call an operations impact test. Well, that basically means that if you had a partial shutdown, right? And think about it. How many restaurants, right, were forced to reduce the amount of people coming into their establishment? So if you're a business owner or a restaurant, one of our clients is a restaurant. Can you imagine being a restaurant owner, having all the risk of being a business owner, and then having the government come in and say, you can only have a maximum of 50% of people coming through your doors through any given time? Well, then that would be a qualifying event. So if some type of government entity where you worked prevented or reduced the amount of time that you could because of mandates, you could be eligible. And again, the Lynx software will take you through. And then lastly is the supply chain interruption. Now there's very broad language, and it can't just be like, well, I couldn't get a pencil, therefore I qualify. No, the IRS says you must not have been able to access a reasonable alternative. Now, one of the examples that I cite is, let's say the automobile industry, right? We've had one of our clients down in Texas own a car dealership, could not get not only cars, but parts, right? Remember that we had the LA ports that were congested. You had ports throughout the world that were reducing people coming into their country, whether that be China or whether that be India or Mexico. There's a lot of companies or countries that, the country shut down business and the companies couldn't access product. So look at your specifics, read through the language of the questionnaire and see if you qualify, because we're finding that a lot of people, in fact, do qualify for the supply chain interruption, but it's got to be with that caveat that we couldn't access other reasonable replacements to make the job function. All right, so what documents are needed to file? Your payroll summaries for 2020, 2021, right? So those are going to be uploaded. Your 941s, which are recordings of your employees and what you actually paid them. I will tell you that if you apply and you don't use one of your major payroll companies such as ADP or Paychex, those companies can upload that data like instantaneously. It's pretty easy. But if you're using a small bookkeeper, a lot of that information will have to be in the form of an Excel format. So download the checklist for details. Caitlin, did you just put that in or make that available on the sidebar?
Yes, it's right up there.
Thank you very much. All right. So as we continue taxation, the credit is not taxed as income. But it will reduce your overall payroll expenses. So what could happen is, although you get this credit, and remember, some people will say, I'm getting more money in a credit than I actually paid in income tax, because it's not measured against your income tax. It's actually measured against taxes you paid for payroll, right? Payroll tax. So that's where the credit's coming from. But if we then therefore get a credit, it may adjust your taxation, but it's a small adjustment compared to the windfall that you could get and are entitled to due to the government program. So download that income tax flyer for details as well. I believe Caitlin made that available.
Sure. If you're watching on the webinar link, you can find all of these files under the Files tab on your right. But if you're on Facebook Live, you can email us at info@professionalplanningservices.com and we'll get you all the documents or the qualifying link that you need.
And thank you very much. All right. And next, a look at the questionnaire. What does this mean for small business owners with 15 employees? And this is just an example, but this is where you can start to see where it's worth the time to apply. So when you put this in, this is a test hypothetical client. They turn around and put it in. They had 15 employees that were W-2 employees. Now, I will say that if you're the owner of the business and on payroll and more than a 50% owner, you are not eligible, right? However, all your other employees are, and you can see here that it's a substantial amount of money, somewhere in the neighborhood of $233,000 in this example, right? Now, interest. The IRS has to pay interest on the credit from the day the credit is filed for them until they cut the check. So, it's worth it for you to A, explore whether you qualify, and B, to make sure that you're timely with this. Some of the clients that we work with over the months here, it takes a while to extract this data, especially if you're using a private payroll company. All right, so timeline. The official timeline is 6 to 7 months. We're seeing clients get their credits in about 4 months, as I had mentioned. Now, the cost to file. So, what happens is, and we've looked at other companies, right, that do some of the ERC. And like I said, some of the stuff that you hear on the radio, not only have I heard misinformation, right, where they're saying, oh, well, you need 5 or more employees. That is not true, right? You just need an employee other than yourself that is not related to you, same last name, family member that is on payroll. But if you decide to use links, right, and in the example, I'm going to just hypothetically, let's say that you qualify for $200,000 of credit. Well, you're going to get it costs 15% or 30 grand to be able to enter into this program. Links, that's how they get paid. Now, that means that you would net or pocket $170,000, right? So that in and of itself, I think, makes it very, very compelling. But at the end of the day, you want to also make sure that you apply for this in a timely fashion, so that, like I said, the first quarter will end at the end of this year. And using ERC specialists and links, we've had the most success with. If you decide that you want to actually do it a little cheaper, some of our clients have paid the initial ERS fee up front, therefore lowering that cost down to just 10% versus 15%. So you can save a few dollars there. All right. So book a qualification call. We'll complete the qualification questionnaire with you in about 15 minutes, or you can go through the qualifier yourself. So Caitlin, point that out on where do they look for that?
Sure. It should be right up on the right-hand side if you're logged into the webinar. I've put up the 15-minute call qualification with Chris right now, so you can book that time using that link. I've also posted it to the Facebook Live.
Thank you very much. All right, so contact us. There's our phone number. There's both of our emails. Both Caitlin and myself are well versed in this. I apologize if I'm looking at the video and it looks like there's a little bit of a delay for me. So if there is, I apologize if, that's technology, not a lot I can do with it being virtual. But again, we're happy to help. And if you need anything, just let us know.
Thanks.
Have a great day.
Bye.